Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Trump signs reciprocal tariff order with non-monetary provisions, impacting global trade outlook. Ether reaches peak bearishness and faces critical turning point, TYR Capital report. Bitcoin's odds of reaching $125,000 by June rise to 44%, says Derive Analyst. Blockchain gaming activity triples year-on-year in January. Coinbase CEO predicts 10% of global GDP on crypto rails by 2030. Trump signs reciprocal tariff order with non-monetary provisions, impacting global trade outlook. U.S. President Donald Trump has signed an executive order to introduce reciprocal tariffs on trading partners, including non-monetary measures and value-added taxes, VATs, as criteria for import taxes. This order signifies a key shift in U.S. trade policy, with potential ripple effects across financial and cryptocurrency markets. Tariff implementation timeline and policy goals. Commerce Secretary Howard Lutnick, alongside Secretary of State Marco Rubio and Treasury Secretary Scott Bessent, has been tasked with studying the issue and submitting their findings by April 1. Tariffs will be imposed following their report, with Lutnick emphasizing that lowered foreign tariffs could reduce consumer prices and production costs in the U.S. Impact of past tariffs on crypto and stock markets. The cryptocurrency market has reacted sharply to previous tariff announcements. For example, Trump's initial tariffs on China, Mexico, and Canada triggered a Bitcoin price drop below $100,000 and over $2.2 billion in Ether liquidations within 24 hours. A subsequent pause in tariffs for Mexico and Canada sparked a Bitcoin rebound to $101,731 the following day. Market volatility following tariff announcements. Further market turbulence occurred when Trump announced a 25% tax on aluminum and steel imports, causing Bitcoin to dip from $97,000 to $94,000 before recovering to $97,000 within 24 hours, demonstrating the crypto market's sensitivity to global trade policies. Trade war tensions and market uncertainty. With additional tariffs on Mexico and Canada postponed until March 1, investors are bracing for heightened volatility. Analysts warn that an extended trade war could drive investors from riskier assets like cryptocurrencies to safer options such as U.S. Treasuries. Could Trump's reciprocal tariff policy redefine the relationship between global trade and cryptocurrency market trends? Ether reaches peak bearishness and faces critical turning point, TYR Capital report. Ether, ETH, is at a critical juncture, with sentiment hitting rock bottom, a sign that a price rebound could be imminent, according to Ed Hindi, co-founder of Swiss investment firm TYR Capital. In a February 13 market report, Hindi stated, Ethereum has reached peak bearishness and is now at a tipping point. Ether's path to potential recovery. Hindi believes recent market trends mirror Bitcoin's performance before spot ETFs launched in the US in January 2024. He anticipates institutional investors holding Bitcoin will soon add Ethereum to their portfolios. Currently, ETH trades at $2,673, marking a 0.64% decline over the past week, according to CoinMarketCap. Despite a brief 3.5% spike to $2,776 after 21 shares filed for ETF staking approval on February 12, Ether retraced its gains within 24 hours. Market sentiment and analyst predictions. Crypto analyst Johnny, commenting to his 808,000 ex-followers, said, "It's comical how quickly ETH retraced its ETF staking pump." Podcast host Laura Shin noted that public interest in Ethereum founder Vitalik Buterin's remarks has overshadowed the 21 shares ETF staking news. Bullish outlook from analysts. Hindi projects that Ether could reach $4,000 within months and hit $5,000 in 2025, potentially gaining 49% and 86% from current levels. Other market voices are equally optimistic. Trader Crypto Mr. tweeted that an ETH reversal is imminent, while Trader Poseidon boldly predicted ETH surpassing $10,000 by March. Will Ethereum's market sentiment shift trigger a bull run above $5,000 in 2025? Bitcoin's odds of reaching $125,000 by June rise to 44%, says Derive Analyst. Bitcoin, BTC, has remained below the $100,000 threshold for over a week, but according to Derive's head of research, Dr. Sean Dawson, its chances of hitting $125,000 by late June have climbed to 44.4%, up from 41.9%. In a February 13 market report, Dawson highlighted growing optimism for a BTC surge amid evolving market sentiment. Bitcoin's upside potential strengthens. Dawson noted that the probability of BTC falling to $75,000 before June has dropped to 12.1%, down from 17.8%. Despite his optimistic outlook, BitMEX co-founder Arthur Hayes warned of a possible decline to the $70,000 to $75,000 range, which he believes could spark a mini financial crisis. Market reaction to Bitcoin's price activity. Bitcoin last traded around $75,000 on November 8, shortly after former President Donald Trump's election victory. This event triggered a rally that saw Bitcoin reach an all-time high of $109,000 on January 20 before retreating below $100,000 on February 7. As of publication, BTC is priced at $96,790 per CoinMarketCap. Crypto market sentiment and expert predictions. Trader Gel predicted continued choppy conditions until Bitcoin reclaims $100,000. The Crypto Fear and Greed Index registered a neutral score of 48 on February 14, reflecting market uncertainty. VanEck's long-term Bitcoin projection. Asset manager VanEck maintains a bullish long-term view, predicting that Bitcoin will reach a medium-term peak in early 2025 before hitting $180,000 by the end of the year, with ETH surpassing $6,000. Will Bitcoin's improved odds for $125,000 spark a broader bull market in 2025? Blockchain gaming activity triples year-on-year in January. Blockchain gaming experienced a significant surge in January, with daily unique active wallets, UAW, reaching 7 million, a 386% increase from January 2024, according to Daprada's February 13 report. This growth underscores the sector's resilience and evolving momentum, driven by technological advancements and emerging trends. Strong momentum and industry maturation. Daprada analyst Sarah Gergelers highlighted that blockchain gaming is entering a maturation phase, fueled by advancements in Layer 2 scaling solutions, evolving token economies, and AAA collaborations, such as Gunzilla Games Off the Grid. She noted that AI integration, refined gameplay mechanics, and innovative reward structures are further enhancing player engagement. Top-performing blockchains and emerging ecosystems. In January, OpBNB led blockchain gaming activity, with Matchain securing second place. Polygon recorded a 100% increase in gaming activity from the previous month. Gurglers observed that emerging gaming ecosystems, though not always meeting AAA standards, are showcasing significant technical innovations and creativity. AI integration in blockchain gaming on the rise. Artificial intelligence is gaining traction in Web3 gaming, with multiple projects incorporating AI elements to enhance gameplay experiences. Reflecting this trend, Tether announced on February 6 that it is expanding into AI applications, including an AI translator, voice assistant, and a Bitcoin wallet assistant. Web3 ecosystem overview and investment trends. DappRadar reported that the Web3 ecosystem attracted 26.7 million daily UAW, with DeFi slightly surpassing gaming by 1%. However, blockchain gaming investments dropped 38% year-over-year to $1.8 billion in 2024, reflecting a broader trend of deploying previously raised capital into active projects. Outlook for Web3 gaming in 2024. Despite the decline in investment, Gurglers remains optimistic, stating that key funding rounds indicate continued confidence in the Web3 gaming sector's infrastructure and innovation. Can blockchain gaming maintain its momentum and outpace DeFi activity in 2024? Coinbase CEO predicts 10% of global GDP on crypto rails by 2030. Coinbase CEO Brian Armstrong envisions a transformative decade for the crypto industry, forecasting that up to 10% of the world's GDP could operate on blockchain infrastructure by 2030. During Coinbase Q4 2024 earnings call on February 13, Armstrong described this period as the dawn of a new era for crypto. Armstrong's vision for a crypto-powered economy. Armstrong compared the current crypto adoption wave to the internet boom of the early 2000s, stating, "On-chain is the new online." He projected that over $10 trillion in value could be tokenized on-chain, referencing the World Bank's estimate of over $100 trillion in current global GDP. U.S. leads global crypto adoption. Armstrong highlighted the U.S.'s pivotal role in driving crypto adoption, noting that the country now has their most pro-crypto Congress ever, which is advancing legislation on stablecoins and market structures. He credited President Trump's efforts to position the U.S. as the global crypto hub, stating that the rest of the world would feel pressure to follow the U.S.'s lead. Coinbase strong performance and future plans. Coinbase reported $2.3 billion in Q4 revenue, marking an 88% quarter-on-quarter increase and exceeding analyst expectations. Armstrong said the company aims to expand revenue through existing products and drive utility in emerging categories to lay the groundwork for the next decade of crypto growth. Regulatory momentum in the U.S. The Federal Reserve's Christopher Waller recently urged for stablecoin regulations, advocating for banks to issue dollar-pegged digital assets. Armstrong believes that regulatory clarity will bolster the U.S.'s leadership and push global markets toward broader crypto adoption. Will the U.S.'s pro-crypto stance pave the way for a global blockchain economy by 2030?